U.S. futures are pointing to a lower open as the spotlight stays focused on Europe. Greece is still fighting for its next big bailout, while yields on 10-year Portuguese bonds are rising to more than 15%. Will Portugal need more financial aid? I'm Alix Steel, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix Steel with The Street, and together we bring you the morning call. Happy Monday, everybody. Now, Scott, we have U.S. futures pointing to a lower open. What level do the bulls really need to defend? Where do they need to get back in here?
This 130.60 to 130.80 is the area that held last week. That was that 4 to 5 day floor that was being put into the market before that little Fed Wednesday giddiness push, which wound up being a push-through failure. So that's the level that I'm watching this morning. That's the type of level that hasn't really been breached since we've had that December 20th gap and go, which created this accelerated uptrend.
And I read a note over the weekend by S&P technical analyst who could expect a pullback of 2 to 4% this week or next, perhaps, which would take us on the S&P to that 1266 level. Would that be constructive in your view or a game changer?
I don't think it'll be a game changer. It just depends on your time frame. I think momentum traders would probably be a little concerned, but if you're a macro investor staying the course, that's fine, and that's probably a compelling area to add. So what let's do right now is just show the chart and show what level you have to get through in order to get there. So first things first, here's a chart of the spiders. I'm going to use that first. You know, we've been talking about these two uptrends. This is the one that started back in October, back when we had that push-through failure. This was the low in October, a higher low in November, a higher low in December. And then right here, this was at December 20th, gap and go, that actually ignited this descending channel, okay, which ignited and moved to the upside. So here we are, right there. That's the floor that I'm talking about. I want to get a closer look here so you guys can really see it, okay. Here was that Thursday push-through failure. Went through Wednesday's high, came below it, short-term sell signal. Here is the floor. This floor has yet to be breached, yet even a close below. So this is your 130.60, 130.80 area. If we do get a close below this area, could see a move down to 129.71. Then the area the guy from S&P is talking about is really a retest of this downtrend that was broken back in December. That stands about 125.79 to 126.20.
Now, what kind of down move though are we looking at? I mean, if we sort of like touch a lower level, bounce off, versus going below a lower level and staying there for how long? And what does that mean? How are you looking at the time frame of this?
That's a very important question, because on time frame analysis, what you want to do is you want to see a 30 to 60 minute close below. So just say that 130.60 to 130.80, we're opening around there now. So if all of a sudden, we open up the market, stocks go green, we all of a sudden go from down 80 points in the Dow to down only 40, then it was support. If we stay there and then go below it, and in the first hour of trading, there's no bounce, there's no dip buyers, so the bears are actually showing commitment to this move, then that opens the door for a further move down intraday. Then if you get a daily close at the end of the day, so basically the bulls couldn't come back and close as strong like they did Friday, then bears might say, okay, now we could retrace a little bit further, and then we watch other levels.
So very quickly before we get into individual stocks, if you have some hedges on now and some longs, when do you change that strategy?
I think you stay with that strategy. Like just say overnight I'm in tier 2 short diamonds. So what I'll do on the open is I'll cover one tier into the support, hold the tier of the diamond short. The longs that I'm holding, I'll say, okay, let me see if they're showing relative strength so I could add to it intraday for cash flow. Then as long as the technical composure doesn't change, I'll stay that course until all of a sudden we do see some damage. But again, a close below this level isn't necessarily damage. I think it could be more healthy. You just have to know how to manage these things.
Right. Good stuff. All right, so let's get to individual sectors to see what's actually showing a strength here. Let's start with the Qs right at its 52-week highs. Speaking to Jim Cramer last week, he was saying that he thinks the semis have actually bottomed and that that's obviously overall bullish for the tech sector. How much more juice are you seeing?
Well, this sector has been leading. It broke its wedge to the upside. Friday was very frisky. Friday, the tech sector had no idea that the Dow was down 80 points. Those stocks were going nuts. So if you look here at the Qs, you will see that it does look like it's still intact. Looks really good. You take a longer-term picture. It's almost above this recent resistance, but you have an upper flag here. It's come a long way since it broke this wedge.
And you have Cisco reporting this week.
Yes.
And Cisco has not been nice for tech in the last couple of quarters. So
Yeah, the last quarter, the 2 quarters before Cisco was a hamper. Last quarter was good, just went from 15 to 19 or so. So it's going to have to be good. So that's definitely something to watch. So the level on the Qs here is right around this, I would say 59.41. As long as it holds above this upper flag, I think momentum is going to stay strong. And even if it broke this, you could get another move lower because of the distance traveled. So this would be right around here. So I would watch this area at first and then this area second. And I really don't think it's going to come all the way back down and retest the wedge break that happened in December. This is an area that you should stay long and just trade around your positions.
And what about retail? Also RTH, also near its 52-week highs. Is it the same kind of strategy? When I was digging through the GDP report on Friday, what was worrisome to me was that final sales, which is GDP minus inventories, only grew 0.8%. We have been expecting 2.5%. So that really worries me in terms of the health and strength of the consumer. We'll get more data today to see if perhaps people are actually rebuilding their savings rather than spending. What do you think of retail and how that all factors in?
I think retail's been spotty. It's been have and have-nots, a little bit more spotty than tech. RTH has led the group or led the market last year. Right now they're not leading, but they're it's consolidating nice. So if you look here at the chart of the RTHs, you will see very healthy action also. This was the last time it broke. This was a big time resistance. It broke above 114. It also had an outside day right here. So I would say on the RTHs, watch this 116 area. If it breaks and closes below 116, you could retest this area, and then that bigger correction would take you down to this moving average around 112.38. But overall, this trend has been very strong. This is your gradual one, okay, right here, and then you even have your more accelerated trend, which comes into here. So I would say don't be concerned at all as a macro investor unless it breaks and closes below 114 on those RTHs.
And then in terms of the XLF, it's a very confusing environment for them, right? If we do see low rates until the end of 2014, these guys are going to have a really hard time making money in terms of what interest rates they're going to be able to charge. Also, revenue is going to be slowing, including because all the issues over in Europe. We saw very confusing upgrade downgrades today. Goldman Sachs upgrades Citigroup and Morgan Stanley, but downgrades Bank of America and removes JP Morgan from his conviction buy list.
These guys are funny because I think last week JP Morgan came out and downgraded Goldman and did some rating switches also. But overall, the group doesn't have that much earnings power. But I think as long as there's no calamity, investors are staying the course because they've been so battered and bruised in the last almost 3 years, let alone the last year. I like the way the group's been acting at this point. Hard to get aggressive, but you have a situation like Friday where Goldman Sachs acted strong. You had a pivot area. That was the trade on Friday. If you look here, Goldman Sachs didn't care that the market was down. Remember, he started drawing this flag. I'm like, JP Morgan downgraded it. As long as it holds in here, it can go higher. Well, it broke above 110. I think Goldman Sachs has room to about 116.54, and I like to call on Morgan tactically. It also has a nice bull flag up here. So if Morgan Stanley and the market doesn't get too beat up today, it gets above that 1880. This could see 21 to 22, which is where that price target was.
All right, so a little bit of trades there for the banks. All right, let's go to XLI very quickly. Forbes had an article actually that said that there was almost a $44 million outflow last week in this ETF. That's about 1.2% decrease from the week earlier. Do you think that investors are starting to rotate?
Yeah, that's exactly what they've been doing. This one had a big move. I'll show you the accelerated uptrend here, and it's steep, and it's steep for this group. This group usually is like slow, methodical. There's value there.
Let's look at it.
This group acted like the tech sector almost. So if you take a look here, you'll see a lot of different areas. This was when it broke above, just say this longer-term resistance around 34. This was, again, the descending channel that it broke to the upside. And look how this has been extending. So you do have a floor here to watch. So if you look at this group as a whole, you could definitely see, hold on, let me just take this off, that area, it's predefined. So as long as it doesn't break and close below here, it's going to continue to go sideways and go up. But again, markets can go down. Corrections are good. So it breaks below this 35.86 area. Then you could see some corrective action. Next spot would be this moving average. And then again, all these things have the same type of pattern where if they come and retest the 50% mark of that, I'm sure everyone will be negative, but that will be a compelling spot for macro buyers to come in.
And very quickly, want to hit on the OIH. So over the weekend, there was an article that said that perhaps Iran might actually put an embargo on their exports to the EU, sort of beating the EU to the punch. The EU kind of had till June to sort out this issue. Iran also said if this happened, we're looking at Brent at 120, 150. So it seems like we're in for a possible spike here.
Yeah, 120, 150 would not be good for this group. I think even Stephanie said that the sweet spot is anywhere between 90 and 110, and it doesn't have to be above 100 or 110 to make that money. But psychologically, people like oil a little bit higher for this group. But overall, this group technically has acted very well. We talked about it. Jim Cramer did the Mad Money, the inverted head and shoulders. tier 2 triggered. You could be in tier 1 or tier 2 based on your risk. You look here at this chart pattern. Here's our left shoulder, here's the head, here's the right shoulder. This was tier 1 accumulate. Then when it broke this recent downtrend, that was your tier 2. And it's still acting okay. It's not frisky, it's not going up really fast, but sometimes that's fine.
Maybe that's even a good thing compared to if other stocks and indices are quite sort of petering out.
Yeah, because investors sometimes like slow, methodical moves. I still think you stay with this group. I like the way Schlumberger looks. I think that one's ready to go. You know, some other stocks are spotty in there, but I think you pick one of those stocks, which could be SLB and the OAHs, and you ride it out for the year.
All right, we're going to have much more and some other quick ways to make some cash today, right after this, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, I want to get in the trenches here with 4 stocks that had triple earning plays, right? They beat on earnings, beat on revenues, and guided higher to see what the stocks are doing. First one is definitely Apple, pulled back from its 52-week high. However, compared to its average price target in terms of analysts, we're looking at 28% upside here. So let's reveal your strategy again.
You want to look for this triple type play, but sometimes it takes a little time to consolidate. It's all about timing. Sometimes these companies have it priced in, and sometimes they don't. And Apple, that was trading up into the number, you know, it's going to take a little time to absorb the earnings gap. So with Apple, I like it. I'm in small right here. If you look at the chart, you will see there are 2 ways to trade this thing. You know, this was the move that we first talked about going into earnings from about 395, and now you have this big earnings gap. This is what traders are going to trade against. Let me just give you a closer look here. So if you wanted to be long Apple and you were very risk averse, you could be long versus gap, and this gap starts at 443.14. So you can be long here as long as it stays above this gap. You stay with it. You know, if you also want to be a Q trader, which I am, I would be adding above this 449, the 2-day pivot, for then a test of that earnings high. But typically, it takes a little bit more time to absorb such a big move like this. So don't be too concentrated here. Be long some, and with time, I think it goes above this thing, and you're going to see 500 plus on Apple this year. And
same strategy for F5. I mean, it's gotten sentiment seems just really positive with this name.
It's been a little bit more choppy. The street wasn't really expecting much on it. That's why it had such a big move, because of the shorts that were involved. You know, I played it last week for a quick move above that area, but it came back. You know, for FF, I think you take a look here. I bought it on this day. Actually, this was the line, and then it came back in. It's still above its earnings gap, so I think you could stay long versus. It would lose some power, okay, if it gets into this area and fills the majority of this gap. If you look more on, I guess, a macro level here. Let's take a look. I think it's risky, but if you want to be in a tier 1, that's fine. Otherwise, just trade it intraday because there's a lot of action there.
All right, let's go to Intuitive Surgical. Well off its 52-week high, sold off after earnings. But Scott, I pulled some stats for you here. Revenue grew 24% in 2011 over the previous year. Profit was up 30%, has 0 debt, has over $2 billion in cash, but has 20% of its annual revenue does come from Europe, so that's something to keep your eye out for. What is the stock telling you?
Well, they just tried to sell this one off because it was a favorite of last year. And if you saw in the beginning of this year, that's what they tried to do on a lot of these. You know, they tried to do it with McDonald's, MasterCard, you name it. But, you know, they all pretty much stayed intact. So if you look here at iSRG, you'll see that here's where, you know, the earnings, not say even shortfall, they just say sold it. And it already came back and filled that gap. So that shows me that this gap had no power. I do think it's going to take some time, you know, to consolidate and go sideways and build another channel here to trade against. So I think for the average investor, it's just hard. It's so expensive. Institutions are there, traders are there. If you've been in it for a long time, stay with it. Sell some in the money calls here and there. But if you're trading it, trade it versus this lower level. I do think I just think it's a non-event right here. It just needs time to keep working its way to the right.
All right, and last up, very quickly, one hit on Caterpillar. You mentioned the industrials were doing their slow, methodical climb here. What about Caterpillar after earnings?
You know, I got a lot of bad emails because the day that Caterpillar came out, I'm like, in my trader hat says the first time it gets to 112 to 114, it's a sell. Earnings were great. Everything is looking good for this company. But you know what? You know, we talked about buying it at 96, buying it at 99. Sometimes they sell the news. And it was definitely a better short into that area. But now with time, it could turn into a long again. So if you look at the chart of CAT, you will see, you know, here is that big gap open, right, with the tail. So, But that's why methodically you have to look at things. This was the first buy, when it was in this overall channel. Here was your momentum buy when it broke above. So into a big earnings report, hard to buy. So
right.
Filled a little bit of the gap. I would say let this thing do some work. I would be in tier 1 if you're a long-term Caterpillar fan, but I do think at some point you're going to be able to buy this between like 105 and 107 as it goes sideways, and then again later this year it breaks above this 114 for higher prices. But it's got to take time to absorb this huge move that it just saw from about 99.
Right, which is a great point. You just can't get suckered in by an earnings report. You have to be really strategic. All right, let's go to some quick ways you might be able to make some cash today. Las Vegas Sands reporting on Wednesday. Scott, sitting right at those 52-week highs. As we spoke about last week, a lot of analysts are predicting rotation out of Wynn into Las Vegas Sands. Sentiment seems really positive, kind of risky.
Yes,
taking it into earnings.
It's risky taking anything into earnings, so I usually don't. I do an option play. We traded this long when it broke that small descending trend line. I just want to show you real quickly on the chart that was right here. Boom, this was your long. And then we also even had a cute short on Thursday, but Friday it showed a lot of relative strength. I am long some. I think this is something to go negative to positive. And I would, if you want some risk and you don't want to own it longer term, there's just such a huge accumulation here over the last 18 months that it tells me that it's going to go higher at some particular point. So if you don't want to, it might not be this quarter though, it could be next quarter. So what you should do is take some in-the-money calls, or take some like maybe $50 calls like a few months out so your risk is calculated. Or if you want to be long this for the longer term, just buy it, and then if it it comes in,
tight.
just sit tight and hold your nose and go in the water.
Right, and we have some catalysts coming up for that company as well. All right, Dang, up almost 18% on Friday. The e-commerce of China. What do you think? How much more juice?
Hold on, this one's a fun one. This one, we talked about Dang and Ren like 2 weeks ago as some volume spikes. On Friday, I got long it for the mere fact that there was like a Seeking Alpha article, and I saw a volume spike, and then took my spin class, and I come back, it's up like 15%. So if you look here, short term, it just had a really nice move. This is when it first came on my radar when it went above this 550, and then basically huge volume came in and it cleared. It's at 830. You got to take a more of a long-term look here to see where it can go, and there's no reason why this was hovered in the 20s for a while, just coming back into its zone. This could have a move to about $10 to $12 before it's all done. I think I'm going to stay with some, but trade it more intraday with some size.
All right, very quickly, 3 more stocks. First Solar up almost 12% on Friday. Is this anything more than short covering, and is there more juice to the short covering?
I think there's a bit more juice, but if you took a lot of this move out, I would just go back to a tier 1 or look at the relative strength intraday. Guys caught this move on Friday. It usually does a day or two, then rests a day. This could be one of those rest days.
And LinkedIn up almost 6%, right? All the social media stocks got a pop on Friday on the news that Facebook might file for its IPO this week. Valuation anywhere between $75 billion and $100 billion. Do you think you're going to be trading it this week off of the Facebook news?
LinkedIn, yeah, it started perking up earlier, like last week, and then it triggered on Friday. I think you could stay with it. Maybe give it an hour or two today, but if it goes positive through Friday's high, I think you have room to 80, 85.
And last up, I got to ask about gold. Had a killer week after the Fed announced low interest rates until 2014. Seeing some weakness today. Wonder where we're going to see some strong commitment to buying.
Well, Wednesday was the day that it ignited. You had your follow through Thursday, Friday, so a bit of a rest is cool. So if we look at the chart here, sometimes you get a retest of broken areas. So this was the downtrend that it broke on Wednesday. Here's your 2 days of follow through. I remember drawing this line of resistance right around 170. It closed at like 169. Okay, so a move back down to this 165, 166 area and holding there, that will get me probably long. I think that if you're looking for a cute short, you're playing with a little fire, I would cover into this down move.
If we break below that line, that's going to be pretty.
Yeah, I would say that the bulls would want to see at least the top third of this area hold, and it hold the downtrend retest, and that's about really it was 164.50 to 165.50. It's not a perfect science, but this thing should not break below 165 if there's going to be strong demand for gold.
All right, it's going to be a pretty busy week, Scott. So you definitely got to manage those positions, right? We have Jobs Friday coming.
Yes, you have a lot coming. You have a ton of earnings still.
Yeah.
You have Baidu today after the close.
Cisco.
You still have Amazon this week. You have Cisco. You have Broadcom. I think, is Broadcom still coming this week?
I don't know.
Okay, so there's multiple earnings. You have European headlines. You just have a lot to do. So just make sure you know where you're in for your position, what your time frame is. Keep managing. Like again, if you're in a tier 2 short the diamonds overnight with 8 long positions, maybe cover a tier, at that support we talked about. But then in 60 minutes, if they can't move us off that support, maybe add some more of your shorts intraday to help fund your longer term macro positions as you maneuver them back and forth.
So be smart, be nimble. That's our takeaway here. All right, guys, happy Monday. I'm Alix Steel from The Street. We'll see you tomorrow. Bye.